What's up, you misfits? What's going on, guys? How the heck are you today? A lot of emotion out there. But hey, here's the thing, guys. It's okay. Emotion is okay. It's how you behave, not how you feel, right? So let's get into it, guys. Let's see what's going on out there today. Eddie dropping the first super chat of the stream says, Rob, your thoughts on us missing the 50-week SMA this week, but still closing over the 50-week EMA? Throw me a bone here. Let me see if I understand what you're asking me here. So you want to know my thoughts on missing the 50-week simple moving average this week, but still closing over the 50-week EMA. I mean, there's some validity to it. I mean, a lot of people look at not just the 50-week on the weekly time frame, but they look at the 200 as well, right? So some people say as long as we stay above that, we're okay, right? There's a lot of different metrics out there, guys, and not one single tool metric or indicator is 100% accurate, right? All we can do is go through them and try to find which ones are most accurate this time, right? And that's kind of what we're going to do this time around. Now, I want to be clear about something. I've been talking over the last 3 days or so about preparations for potential downside, right? Now, I'm not talking about this because I think we're going down or that I'm bearish. I'm talking about it because I need to make sure you guys are prepared for any and all scenarios, right? So you can't just think that everything's going to be sunshine and rainbows. You have to know the potential risks of the downside so that you can prepare for them, right? That's why over on the Patreon, I am releasing my plans on a daily basis as to how the market is evolving and how I am responding in terms of my portfolio and what my choices are and what I'm doing, right? So that's why you're going to want to be tuned in. You're going to want to be locked in to know what I think on a daily basis, what I'm going to be doing with my portfolio on a daily basis, right? So, okay, so just the one super chat. Let's get into the chat a little bit here. See what's going on. Let me scroll up to the top here. Busy chat. It's me, Mario. We broke crypto. Yes, you're actually on time, Mario. H. Barbarina in the house and ready for what is coming. Joy says, hey, Rob, much love. Finally catching a live. It's been a while. Yes, absolutely. Everyone got the likes, and happy Friday. It is open mic Friday night tonight as well, guys, over on the Patreon. William, good to see you, buddy. Another local says, so much opportunity today. Spoiled for choice. Thank you, Rob. Hey, absolutely, man. Absolutely. Quentin, what's up, buddy? I see you, my guy. Oho says, time to hibernate. Laura the Round, good afternoon. What's going down? Guys, make sure you're hitting the like and subscribe. We got 102 people here. We have 33 likes. Let's get up to 100, guys. We can get to 100. We can get to 100. Big John's in the house. What's happening, man? Do you feel Zebek is the safest bet right now with the uncertainty? Like I said, what I think the safest bet is, I've actually been creating a series of videos on the Patreon breaking down what I think the safe bet is today, and I went over that in today's video over there. So go watch that video, and you will see what I think the safest thing to do right now is and moving forward. So check that out. I don't talk about it on YouTube. That kind of stuff is for the Patreon community. Paul, good to see you, buddy. There she is, the one and only Gamma Goddess. Let's get this money. Hell yeah. Ari's in the house. What's going on? What's going on? Adam, what's up? This market's really testing me, but I might be more concerned if making life-changing wealth had no challenges. Yes, exactly. If it was easy, it probably wouldn't be worth doing, right? Dave, what's up, man? Not selling, brother, man. That's what I like to hear. Richie Rich, little worried right now, but still strapped in tight. There you go, man. Little fear is healthy, right? A little fear is healthy. It doesn't hurt to pucker the arse a little bit, right? From time to time. Oh, how says Rob, you may need to get a life alert for the market and hip. I've fallen and I can't get up. Ty, what's going on, man? X-ray went good, bro. I was supposed to go this morning, but I'm actually going this afternoon. So, yes. Gary, what's going on, man? How did Rob Mass get beat up by a dryer? He raked the eyes. Was the rake of the eyes. Took me out. And then the low blow, chair shot, boom, took me out. Hey, guys, what is a pony with a sore throat? He's just a little horse. There you go. Screw the Bears. There you go, Kev. Ninja made a good observation in a video earlier about how the banks are not stable. Could we see a massive inflow into crypto if banks start to go under? That's possible. He brings up a good point. That's possible. I mean, it's been a concern for decades now in terms of the banks, right? So maybe that's why we're starting to see this adoption when it comes to banks and crypto, right? Possible. Interesting point for sure. To want to climb over the top, supporting me over on Rumble, guys. Make sure you're subscribed over on Rumble. We got to get that climbing. Ready for crypto integration with Rumble. Yes, let's go, guys. Please follow us over on Rumble as well. I bought $15 worth of Bitcoin. I'm doing my part. There you go, man. There you go. It's a drop in the bucket, but you know what? It adds up to big things down the road. Jake the Snake says, Robert, I bought the top and sold the bottom. Now I'm going to scream and holler in the chats. Do I qualify as an accredited investor? Now, absolutely. You are a successful trader at this point. There you go, brother. All right, guys, we're at 117 people watching now. How many likes do we have? 44. Let's get to 100, guys. Come on. Smash the like. It's absolutely free whilst I get into the news since we're all caught up in the chat. So as you can see, guys, on my very, very amazing artistic Bitcoin chart, what do we have? We have a CME gap down here between 91 and 92K, which honestly, it's not that much further down to go. I mean, look at how much further we have to go. It's not much, right? So it wouldn't be that terrible, right? And then up here, this big red one, yeah, that's right. Another CME gap to the upside between 104 and 110. So there are some bullish things, guys, right? Nobody knows for sure which direction the market's going to go in, but there are bullish indicators all around us. Let's go check out the RSI. I want to see the RSI. I haven't checked out the RSI on the monthly, right? Okay, so like look at the RSI right now on the daily time frame. We are in the oversold, right? 31.23 on the RSI. If we go to the, let's go to the weekly. We're in oversold, barely, but we're there at 40.56. And what about the, let's go to the monthly. 57.32. The highest we've been in a long time. This was back in March. We got to 90 in March, right? But outside of that, I mean, we've not seen, that was March. Oh, that was 2021. Never mind. So, I mean, like, look, guys, the RSI on the monthly time frame for Bitcoin has not gotten any higher than, right about there, 76.58. We haven't even come close to oversold conditions on the monthly time frame for Bitcoin. Not even close, right? So that's very, very good. The last time we got into the oversold around 90 was back in, like I said, March of 2021, right? So, yeah. So that's another positive sign, right? Another positive sign. Let's go back down to the daily time frame. So, yeah. So there are some things to be bullish about, okay? Some things to be bullish about. Let's get into the chat. Oh, we got into the chat already. Gary says, I would hate to be a giraffe with a sore throat. William, well done, my friend. Well done. Rise Above says, hey, Rob, thanks for the morning news for the Patreon. I'm following your lead. Hey, absolutely, man. Oh, says, I believe Rob on the Patreon said if anyone wants to sell, just send all your crypto to Oh's wallet. Strawberry Dragon in the house. What's going on? Yeah. Nice. Well played, O House. Well played, man. All right, let's get into the news. 148 people watching, 58 likes. We're getting there, guys. We're getting there. Let's get to 100. Let's get up there to a hundo. All right. Let me just close this out. All right. Amon says, hey, Rob, are there any CME gaps beyond the red box? No, I don't know. I haven't checked. That's just the closest one. So, to the upside. Bitcoin is dead again. History repeats itself. Following Bitcoin's latest price correction, a familiar phrase, Bitcoin is dead, is once again making the rounds. It's become something of a meme within the crypto world, one that pops up almost every time Bitcoin experiences a significant drop. This time, Bitcoin has faced yet another sharp decline, triggering panic across parts of the market. And with that comes a dramatic declaration. It's over. Bitcoin is done, and it's dead again. But anyone who's been in the crypto space for more than a few cycles knows this tune all too well. The phrase Bitcoin is dead has been declared hundreds of times over the past decade. In fact, there's even a website, 99 Bitcoins, that tracks media articles proclaiming the digital asset's supposed demise. To date, the number of deaths is well over 470 times it's been declared that. Each time, Bitcoin has rebounded from crashes in 2013, 2018's bear market, the C19 panic of 2020, and to the 2022 collapse. Bitcoin has consistently found a way to recover. It's this pattern that long-term holders and crypto advocates point to when they see these doom and gloom headlines appear. Though the current dip may look steep, it comes after a period of substantial growth. Corrections are a natural part of any volatile asset, especially one as globally traded and sentiment-driven as Bitcoin. Rather than signaling the end, such market restrictions often flush out weak hands and reset the price for future gains. The fundamentals, network strength, institutional interest, adoption, and hash rate remain strong. So, is Bitcoin really kaput? Or is this just another chapter in a decade-long tradition of premature obituaries? Little food for thought. DH, can you explain the mechanics of why CME gaps act like a magnet? Is it just an excuse for manipulation? No, it's not. It's not. The gaps they always fill, right? That's not really a form of manipulation, the CME gaps. I explained the CME gaps in a video. Did I explain it? Yeah, I explained it in a video this morning. This morning I explained it. So yeah, in my morning video for Bitcoin. So go watch that. It's on YouTube. I break down the CME gaps and what they mean, and I give a whole thing about it. So Jay, how much in the shorts have powered up on BTC? You mean how much is piled up? Yeah, here's the thing. We have like no longs for the most part. There's like none, right? So these shorts are getting dangerously close to getting liquidated here, right? The more they pile up, so on the daily time frame, maybe 1 billion if we move up, but oh, that's perpetual futures. Sorry, wrong one. Here we go. Here we go. Spot. Now, if we go back to 101,000, 3 billion, 3.08 billion gets liquidated on the daily time frame. We go up to the weekly. Like, look, there's like no longs, guys, none. This is another bullish sign, right? Another potential bullish sign. Look at all of these shorts piling up versus the longs. Look at that. There's like no longs, guys, none. Right? But look at all these shorts. Oof. Man, Bitcoin gets back up to 115. That's $15 billion in shorts. It's a very strong possibility. Market manipulators are looking at, market makers right now are looking at that $15 billion and smacking their lips, guys, right? No, I don't think any altcoins are going up soon, but I think soon is relative, right? So yeah, depends on what you mean by soon. I think we're probably going to find a bottom and consolidate, and it's probably going to take 2 or 3 months to work our way back up at this point. So, those meds cut you all over. I was going to ask, hope the wife is doing okay, especially with the holidays coming up. Thank you, Ohas. Yeah, she's spending a lot of her time focusing on decorating and stuff like that, right? I mean, it definitely is going to be a hard Christmas this time. So, absolutely. Okay, continuing on. What else do we have? We got some clips to get through. Check this out, guys. So, Eric Trump just destroyed the host live on Bloomberg on Bitcoin's price crash.
On this one for you. Guess what Bitcoin prices were exactly 2 years ago from today? I'll tell you because you wouldn't know. 36,500 was the cost of a Bitcoin 2 years ago. We are up 180% in a 24-month period. The spot price of BTC is probably the number one performing asset, of any asset. And this coming from a guy who believes in hard assets, right? I mean, I run one of the great real estate portfolios anywhere in the world. Cryptocurrency is absolutely on fire. Cryptocurrency is taking on the whole world.
Well, Bitcoin is up this year by about 5%. The S&P is up 15%. The NASDAQ 100 is up 20%. Gold is up close to 60% this year. No, I'm just saying.
Do you want to reverse? Hold on, Carol. Do you want to reverse that? I mean, do you want to go back 2 years? Do you want to go back 3 years? Do you want to go back 5 years? Do you want to go back 10 years?
I know how to dice and slice the market.
Have gone up on average of about 70% a year over year for the last 10-year period of time. All I'm saying is if you invested in BTC 2 years ago, it was probably the best investment you could have made. If you invested in BTC 5 years ago, you're sitting on infinite amounts of money, right? BTC has been probably the highest performing asset of the last decade, right? Now also with BTC comes volatility. With crypto comes volatility. Volatility is our friend. Volatility is something that should be harnessed, right? And so I think Bitcoin is going to continue to massively overperform the markets. Of course, you're going to have drawdowns, right? I mean, every cycle has drawdowns. You were talking about NVIDIA, in the intro clip to introducing me today and how they're down 4%. And this is one of the largest companies on earth, if not the largest company on earth, right? I mean, that's down 4%. You're going to have drawdowns and things. That's life.
No,
but look at the historical performance of an asset, and nothing has compared to what Bitcoin has.
Totally understand.
Yeah, he's right, guys. The long term. And that's what I try to tell you guys. How many times have I said you gotta look at crypto from an 8-year perspective? I've said that hundreds of times to you guys. Don't just jump into crypto and think I'm going to be rich in 2 months. It's an 8-year. I don't think I know any crypto investor that I know personally who got rich any sooner than 8 years that made like millions of dollars. It took them 2 cycles, right? And you get this flow of people who come in and think that they're going to get rich in 2 months because they heard about some meme coin that made somebody $8 million overnight. But what you don't hear about is the millions of people or hundreds of thousands of people who lost money on that same meme coin for that one person to become a millionaire, right? So, spot buying brilliance, why extreme market fear creates perfect entry points. Strawberry Dragon says, positive side, more time to grow my bags. Exactly, more time to increase your net worth. I feel like too many good news came out at the same time, and people were expecting for the market to flourish, but the market always does the opposite of what people expect. Well, maybe, Jack, that means that now that everyone's expecting a bear market, we go up, right? Rob, some of us are only 4 years old in crypto years. Yes, exactly. Yeah. We're still toddlers. Have you ever wondered when the absolute best time to buy cryptocurrency might be? According to LD Capital founder Jack Yee, that moment arrives when market fear reaches its peak. His recent analysis suggests that current conditions present exceptional opportunities for strategic spot buying. Market corrections often trigger emotional responses that cloud investors' judgment. However, experienced traders understand that extreme fear typically signals excellent entry points. Spot buying during these periods allows investors to accumulate assets at discounted prices. Jack emphasizes that while the current correction feels prolonged, the actual decline from market highs has lasted just over a month. This perspective helps investors recognize that downturns are often shorter than they appear. Several factors align to create favorable conditions for spot buying. First, negative market factors have largely resolved. Second, fear levels have reached extremes that historically precede recoveries. Third, the fundamental value of many assets remains strong despite price. Consider these advantages of strategic spot buying. Lower entry point prices increase potential returns, reduced competition from fearful investors, opportunity to build positions in quality projects. Historical patterns favor buyers during fear peaks. Successful spot buying requires more than just timing the market bottom. It involves careful analysis of market sentiment, project fundamentals, and technical indicators. He suggests that investors focus on projects with strong development teams and real-world utility, something like Zbeck, for example. Moreover, diversification remains crucial when executing spot buying strategies. Spreading investment across multiple promising projects reduces risk while maintaining exposure to potential gains. While spot buying during fear periods offers advantages, investors must remain cautious. Market conditions can change rapidly, and not all assets recover equally. Proper risk management includes setting clear entry and exit points, which is just one of the things we help you with over in the Patreon. Designing exit strategies for you and exit price points, profit-taking levels. Remember these risk management tips. I know most of you are sick of hearing them. Never invest more than you can afford to lose. Dollar cost average to reduce timing risk. Maintain a long-term perspective and keep some dry powder for additional opportunities. Not financial advice, just education, right? Okay, what else do we have? We have Paul Atkins. He says he provides an update on the agency's plans following the government shutdown.
Unfortunately, for the last several years now, the industry has been operating in a fog. They couldn't really figure out what the SEC was looking for and how this new technology could be accommodated within the ancient rules that applied to paper filings and paper stock certificates and that sort of thing. We're talking about now digital assets and that sort of thing on chain. So what we need to do is focus on the basics again, what are securities and whatnot, and then collaborate with our sister regulators, most importantly, the Commodity Futures Trading Commission. So if you divide the taxonomy that I outlined, and obviously this is my views, and we'll work through notice and comment rulemaking ultimately on all of this, but if you have digital commodities, digital collectibles, digital tools, and finally tokenized securities, and the first three are not securities, and tokenized securities obviously are. So the rub comes in defining, what is and is not a security, and so that's what we are, setting out to do. But basically, the token itself is not necessarily the security. It represents the security, and there's one particular type of security called an investment contract that has been bedeviling the industry and the SEC now ever since tokens started coming out, sort of a decade ago. And so it comes out of a Supreme Court case back in 1946 regarding Orange Grove. So that's hardly apposite really to things currently, but we will take steps to help define that, so that's where tokens can be part of a series of promises, but those promises can be fulfilled, can go away, and so a token is not always a security.
That way, the next Gary Gensler can't step in and screw everything up for everybody, right? Coinbase blasts bank groups over stablecoin reward bans. Coinbase is taking a strong stance against recent efforts by banking industry groups to halt merchant rewards linked to stablecoin payments. In a fiery response, the crypto exchange labeled the move as un-American, arguing that it stifles innovation and consumer choice in the rapidly growing digital assets sector. Stablecoins are digital currencies pegged to traditional assets like the US dollar. They're increasingly used for fast, low-cost transactions. Some merchants and platforms now offer rewards for using stablecoins, similar to cashback for credit card purchases. However, banking groups see this as a threat. They argue that stablecoin rewards could create instability in the financial system and shift power away from regulated banks. Oh, so the banks don't want to lose control. Oh. Critics also claim that these programs could bypass anti-money laundering rules or given an unfair advantage to crypto platforms. You mean like the unfair advantage that banks have had over their customers for decades? How they take our money, lend it out, and they gain a massive interest rate on lending out our money and give us 0.001%? Yeah, they don't like it when the shoe's on the other foot, right? Now they want to complain. I didn't see them complaining when they were making all the money. It wasn't a problem. It wasn't unfair then, right? For Coinbase, these claims are more about control than actual risk. The company argues that stablecoin rewards encourage financial inclusion and promote healthy competition in payments. This attempt to block innovation under the guise of consumer protection is both misleading and harmful, Coinbase stated in a recent press release. They also pointed out that major US-backed stablecoins like USDC are already regulated and transparent. Coinbase believes traditional banks feel threatened because digital assets are offering faster and cheaper and often cheaper solutions than legacy systems. This clash signals a broader tension between emerging digital finance models and established banking powers as more consumers, I get the hiccups, adopt stablecoins for everyday payments. Banks may find themselves struggling to compete unless they adapt. So banks are going to have to start offering their customers fair yield or risk losing to stablecoin yield. Coinbase is urging regulators and lawmakers not to cave to what they call anti-competitive lobbying from bank groups. The company warns that banning stablecoin rewards could slow down America's leadership in financial innovation, pushing users to oversee platforms instead. Exactly. If the US conforms to what the banks want, and they stop good yield on stable coins to customers, those customers are just going to get the yield from exchanges overseas instead. And then there goes the whole concept of America being a leader in the crypto space, flushed right down the toilet. All that money's just going to go overseas, right? Let's go back into the chat. Let's go buy back in at 150K. Derek, which project is better opportunity between B3 or Beam? Well, I mean, that's tough. They're both good projects, but I'd probably have to give the lean over to B3 just because it just feels like anything on base is just, fantastic. So some people are 4 years old if they're stuck in Hamilton Ponties, yes. Hey, I don't think we've reached the top. Bitcoin has been consolidating in this range for the past year. I agree, Carlitos. I don't think we've topped either. Rob, I think we'll get any tradable. Dumps next couple days. Well, actually, Benjamin, here's the thing. Over the next little bit, I'm going to be focusing pretty hard on our trading group, and we're going to be putting out multiple trade videos every day while this is going on so that everyone's making money over in our trading group even when the market is red. So I would highly encourage you, if you are not in our trading group and you want to make money while the market is red, jump over there, start learning how to trade. If you don't know how to, there's courses over there that are free to you as a member. Jump over there, start trading with us today, guys, because we're just knocking it out of the park, man. Last November 13, 2024, we were at 90K. There you go. Thank you, Rob, for everything you do. Just waiting for your call to back up the truck. There you go. Braveheart says, poor bankies need... Yes, B3 is taking a hit today. Yes, it is. It's a great DCA, just my opinion. About to buy more dip today so I can position myself for life-changing wealth. Get on the Patreon. Pity the fool. Ow. I think I just got bit by a freaking bug or something. That hurt. Kizza, what's up, buddy? Good to see you, man. Good to see you, my dude. Let's get over to Squawk Box, guys. What's going on over there today? Next couple weeks are big. Yes, you got it. You got it, man. I want the market to be in extreme fear. Yes, you and me both, man. You and me both. We've essentially reached a deal with Switzerland.
And Trump has announced frameworks for agreements on reciprocal trade with El Salvador, Argentina, Ecuador, and Guatemala. Joining us right now on the latest on trade negotiations is United States Trade Representative Ambassador Jameson Greer. And Ambassador, thank you for being here today. The way it's being boiled down, at least in the headlines, and tell us if this is the right way of seeing this, is that there are going to be exemptions to these tariff barriers that are there for goods that we can't produce in America, things like bananas, things like coffee, or maybe even things that we want to see lower prices on, like beef. Is that the fair way to frame it?
Yeah, I mean, listen, since the outset on April 2nd, when the president announced his reciprocal tariff program, on April 2nd itself, there were some items that weren't subject to tariffs. And then in early September, the president put out a notice to the world saying, as I start to conclude these deals, we're going to let out tariffs on some of these things that we don't make in the United States. And so this is just following through on that promise. He's made the deals now. In addition to these 4 Latin American allies, we have deals with a number of Asian allies, also the UK and the EU. We have a critical mass, and so the president's determined, now that we have this in place, we have these deals in hand, it's time to take off some of these tariffs on products we don't make here.
The Democrats did very well in the elections a couple of weeks ago in New York City, New Jersey, Virginia, and there are some people who say that this is the administration's focus on more affordability, because that affordability catchphrase is something that the Democrats have been trying to play up and make political hay with. Is that true?
Well, I mean, the reality is, at a macro level, the president's trade program has been incredibly successful. We've opened up markets for our exporters. We're reining in the trade deficit. Are there micro areas, like bananas or coffee or cocoa or things like that where we don't need a tariff. I think that's right. The president appropriately used them as leverage to get these deals. I mean, Ecuador, that's a country. What do they export to us? A lot of bananas, coffee, things like that. Some of these other countries. So it makes sense when you're making a deal and giving tariff relief. It's mutually beneficial for them and for us. So the timing is right.
I guess my question would be more pointedly, though. The president himself has said that while these are goals that we want to increase production in the United States in areas where we can, we may have to live with higher costs for a short time. I think his comment at one point was maybe for Christmas you get one toy, one Barbie doll instead of 2 or 3. Is that still the mindset of the administration that, look, these could be painful in the short term, but these are goals that long term really matter and we're focused on that?
Well, when you're adjusting supply chains, companies always, have some reallocation of costs, and they don't like that. When we look at prices overall this year, prices generally are in check. And like I said, I think there are, kind of these micro areas, edge cases, and some of them are things at the grocery store, right? But a lot of these things are healthcare or housing or education, things that have nothing to do with the import or export of goods. So, I don't think we want to have super cheap stuff from Asia that undermines our own manufacturing. But at the same time, we haven't seen a huge increase in some of those kinds of goods. So I think you have to go product by product, really, in these kinds of cases.
I agree.
I know you are headed to London later this month to work on trade and tariff issues with the UK. Is that the next in line? Is it Switzerland? Where do things kind of stand in terms of the who's on deck?
Sure. So Switzerland is probably the next one. I just met with them yesterday afternoon. I've spoken with the president just this morning and yesterday. I've coordinated with cabinet colleagues, Secretary Letnick, Secretary Besson, the Chief of Staff. And this is something where we've essentially reached a deal with Switzerland. So we'll post details of that today on the White House website, where they're going to send a lot of their manufacturing here to the United States, pharmaceuticals, gold smelting, railway equipment. So we're really excited about that deal and what it means for American manufacturing.
How long was that deal in the works, and what kind of pushed it over the top?
Well, it's really been in the works since April, when the president started his reciprocal trade program. Switzerland, like dozens of other countries, have been extremely interested in having market-opening deals with the United States, where they open their markets to us, and we, modify the reciprocal tariff somewhat for them. Like all of the president's deals, we keep a tariff. We retain a tariff on these countries because we have to get the trade deficit under control. But because Switzerland, for example, has agreed to manage its trade surplus with the United States in terms of making sure that, things where they have a surplus with us, pharmaceuticals, gold, et cetera, their companies are going to build here, so it's going to eliminate some of the sources of that surplus. I mean, we've already seen, Roche has actually broken ground already for a pharmaceutical facility in the United States. That's really exciting.
Ambassador, there's a lot of conversation about affordability. That seems to be the buzzword of the moment. Apparently, it was discussed with the president and some CEOs just a couple of days ago at the White House. I'm curious, when you think about some of the tariffs that have now been lowered on countries that export things like bananas and coffee and the like, whether that's an acknowledgement to any degree that tariffs have raised costs to American consumers.
Well, it depends. It depends what the importers do with the tariff. Our assessment, and frankly, my experience as a trade attorney out in the private sector, is that when you impose a tariff, it ends up getting allocated along the supply chain. And the more foreign producers and suppliers you have, the more they eat that tariff because they want to compete to keep market share in the United States. If you're in a situation where you have a sole source provider overseas, then they're more likely to pass it along. I've been in contact with a lot of the U.S. companies that process or use things like coffee or cocoa or bananas or things like that. And they've said, listen, we've had some secular price increases over the past 2 years because of weather events in Brazil or other places like that. So when you look at the overall price trend, it hasn't been because of tariff. It's been because of these other events going on and just supply and demand. Now, if the tariff has been passed along to the consumer by these retailers, and a lot of them I think have withheld it, at least that's what they've told me, we expect that any price savings will go along to the consumer. I mean, that is the expectation. So we'll see what happens.
What was the rationale then for shifting the tariff prices for countries like Guatemala, for example, or some of the other countries where bananas and coffee and other things were coming in? I thought it was to make it more affordable for for Americans, which to some degree is an acknowledgement that the tariffs raise prices on items like that?
Well, every trade deal has concessions on both sides, right? And so our concession to Ecuador and a lot of the other countries we're negotiating with right now who are close to deals, but not quite there, is to make sure that they can send us things that we can't make. It coincides with the concessions they're making to us to open their markets to American poultry, pork, beef, industrial goods, et cetera, our services companies. So this is part of the normal push and pull, but also coincides with the president's commitment in September that he was going to remove tariffs on some of these hard to find items, or items we can't grow in the U.S. just due to the climate. I mean, it's something he signaled for the past 2 months, and now we have a critical mass of agreements with countries who make this stuff. So this is good timing.
More tariff agreements coming into place. Very good there. Very good there. What else do we have? But more Swift at this price. Nice. There you go. Are we cooked? Not in my opinion. Not yet. Not yet. Wish I had dry powder to buy B3. There you go. The sentiment's really bad out there. Rob, do you think we could wick down under 90K to possibly flush weekends? Yeah, absolutely. I think that's possible on a wick, not on a closing candle basis, though. So yeah, and you know what? Here's the thing, guys. The more bearish the sentiment is in the markets, the more bullish I get, and vice versa. The more bullish the sentiment is in the market, the more bearish I get, right? So right now, with being in extreme fear the way that we are, I'm getting deeper and deeper into bullishness, right? As a result, I always go the opposite of the market. So, all right, Colin talks crypto. He says key takeaways. Number one, he says, I think we get a big bounce in the next day or two. I'm not selling. So he's talking about his comparison with gold. The megaphone pattern here, we wicked perfectly off the bottom of the megaphone pattern, as you can see. The death cross is getting ready to play out. Now, again, I've explained the death cross multiple times to everybody, but the death cross is actually a lagging indicator, which will take place tomorrow. Okay, tomorrow is a death cross. Now, that's a reason to be bullish, not bearish, because this death cross represents this move down that already happened. It's a lagging indicator. It's not a preceding indicator, right? Or a precursor. Yeah. Anyway, it doesn't represent a move that's coming. It represents a move that has already happened. So I agree with him. So Colin Talks Crypto thinks we're going to see a big move in the next day or two, which would bring us perfectly into closing the week above the 50 week. That would be super fantastic. So yeah, I hope he's right. Benjamin, so many shorts think will pop. Yeah, that could be another reason right there, is all of the shorts that have piled up combined with, with everything else. We could see a big reversal in the markets, guys, right? BlackRock unloaded 250 million yesterday. Fidelity unloaded. Grayscale unloaded 300 million. Yes, but here's the thing, Brandon. Yes and no. It's not actually the institutions that are choosing to sell Bitcoin because they're bearish on it or that they think it's going down. They're custodians of Bitcoin for ETF holders, which means that whenever BlackRock or Fidelity or Grayscale, whenever they sell Bitcoin, it's because their customer asked them to sell their Bitcoin. It's not because the institution is bearish on it. It's because the customer got weak hands, got shaken out. That's what that means, right? But a lot of headlines don't tell you that. They make you think that BlackRock's bearish on Bitcoin, and that's not the case, right? Candyman says, I don't want to get too emotional, but man, oh man, every time I put the car in reverse, it takes me back. Ron, would that create another CME gap if we pump over the weekend? Yes. Yes, it would. Yes, it would. But here's the thing, Ron. This last CME gap, like the one down at 91, 92K, that thing formed a few months ago. Just because we create a CME gap doesn't mean it has to fill right away. It could be months before it fills. You have to remember that, right? Start of the bear market to electric boogaloo. Benjamin, you're awesome, Rob. Appreciate you, bro. God bless. Hey, thank you so much, brother. Don't get caught up with the drama, guys and girls. Exactly. 100%. So yeah, hopefully Colin is right here in what he's saying, what his projection is. So yeah, let's go back over to the Bitcoin chart and have a little bit of a looky-loo. All right, so yeah, so we are in a, I don't know. I think there's just as good of a chance we break to the upside as we break to the downside here, guys. There's so many different, I know there's a lot of different content creators out there, and they're all cherry picking metrics, whether it's to the upside or to the downside. And, you know, I try to point out the ones to the downside, and I try to point out the ones to the upside to give you guys a more well-rounded opinion of which direction the market's going to go. Because at the end of the day, there is no 100% guaranteed person out there that can tell you which direction the market's going to go in for sure, right? But there are a lot of bullish metrics going on right now. There's a lot of shorts piled up and pretty much no longs at all. So potential short squeeze could take place. RSI, very much in the oversold right now. Very bullish, right? So there are things. We've never reached max euphoria. RSI in this cycle has not reached into the exhausted, oversold, or overbought range either. A lot of bullish potential, guys, right? Milk money. Looking forward to open mic night. Yes, exactly. Candyman says, what percent corrections are we in Bitcoin right now from the all-time high? From the all-time high, we've corrected... wait. There we go. From the high to the low, 24%. 24%. So for perspective, and I've talked about this before, in May of 2021, Bitcoin corrected over 44%. Yeah. Imagine that. Imagine that, right? And we still, here, you know what? I'm going to show you. I'm going to show you because I'm that guy, right? Because I'm that guy. I'm a nice dude. So what do we see? That's 2024. Let's go back to the previous cycle. All right. Here we go. Look at this, guys, okay? This is what happened in the 2021 bull run, okay? The 2021 cycle. We just checked. We've seen from the high so far a 25% correction on Bitcoin, okay? 25%. We saw in April, starting in the middle of April to where it bottomed out in July, right? 54.48% correction on Bitcoin. 54.48%. And it took 97 days, so 3 months, on average about 3 months, right, to correct. Now, what do you think, all right? What do you think the sentiment was in the market? Consider what the sentiment is right now in the market with a 25% correction from the all-time high, right? What's the sentiment right now? Bear market, right? Sentiment is worse than any of you have ever seen before, right? What do you think the sentiment was right here? What do you think the sentiment was? 3 months from the top to the bottom, 54% correction in Bitcoin. That's twice the size of the correction we're seeing right now. Twice the size, right? Sentiment was awful. Absolute nightmare. Bear market scenario. Everyone thought it was over. And look what happened. Bitcoin went on to put in a new all-time high. It went on to go parabolic, and it went on to put in a brand new all-time high, right? Over the course of, after 3 months of down, it went up for 112 days after that. 112 days, it went nuts. So what's that, 4 months after that? It went parabolic and hit a new all-time high before the cycle ended, right? Now, let's go have a look at I just want to look at the altcoins at that time, because I know everyone's sitting there right now going, well, what about the altcoins, right? Well, let's have a look at the altcoins. Okay, let's look at what they did in that same time frame. All right, here we are. Look at this. So what did we see? Same thing. April, May. What happened? Altcoins corrected from the high to the low. The total altcoin market cap, 61.67%. 61.67, okay? 61.67. Let's look at the correction right now. So this is right now, okay? 67%. Right now, it's corrected from the high to the low. 30%, half, right? So again, it was twice as bad in the last cycle, okay? And then look what happened. Again, I have to ask the rhetorical question though, first, right here. What do you think the sentiment was in the altcoin market at that time? What do you think it was? I guarantee you it was the same as it is right now. It's over, bear market, all that stuff, right? And yet, the altcoin market cap, total 2, went on a parabolic run of 180%. I know it doesn't sound like a lot, but that's the total altcoin, the total 2, all the altcoins, the market cap went up 180%, went parabolic and put in a new all-time high. So we went from, so it's not just Bitcoin, okay, that did that. Altcoins did it too, okay? So we went from doom and gloom, it's over, bear market, we're going down, to new all-time high. Where are we right now? It's over, bear market. Are we going to go on to put in a new all-time high? Well, you let me know what you think, right? So yeah. Anyway, just a little food for thought, guys. A little perspective for you, right? Because I know that there's so many people out there right now saying that this is different, that this has never happened before, sentiment has never been this bad, all that stuff. I know there's people telling you that on YouTube, on X, in the chats, everything, right? However, I just showed you, yes, this in fact has happened before, okay? Sentiment was as bad as it is now before. Altcoins crashed worse, twice as bad in the last cycle as they did this time. And again, this is 2021 right here, 2021. Now you tell me, when you hear somebody talk about the 2021 bull run, they're always saying how easy it was, how, you know, this time is different. This cycle's so much harder than the last cycle. Do you know why? Because you don't remember the bad times. You only remember how it ended up ending, which is right here. That's what you remember, making life-changing wealth. You don't remember, nobody remembers this crash that was twice as bad as the one that's happening right now. But you don't ever hear anyone talk about that. Why? Because it went parabolic and they made their money. So that's what they remember. They remember that it was good, it was easy breezy, lemon squeezy, right? But it wasn't. It wasn't all easy breezy, lemon squeezy, right? It was not squeezy at all. So just a little bit of perspective is all I'm trying to give you here, right? That this, in fact, has happened before. And it'll happen again. Okay? Remember the last cycle? Yes, exactly what I wanted to point out. Yes, exactly, Candyman. You hit the nail right on the head, bud. Glad to be stuck in the middle with you. Bulls to the left of me, bears to the right. Greatest sale on earth, class of 2019. There you go. All right, guys, I got to get over to the Patreon. I got some coaching calls I got to do. Get over there, get yourself into one of our coaching calls so we can get you pointed in the right direction. We can help you customize your portfolio, devise your exit strategies, your profit-taking plans, restructure things if they need to be, and we can get you pointed in the right direction. It's also open mic night tonight, so get over there, my friends. I'll see you in the Patreon. Click like if you like this video. Click subscribe if you really liked it. See you guys in the next one. God bless.